Mela, I will be doing 4.2 of the 2018 paper. We need to prepare the general ledger, and the information provided below is taken from the books of Clear Traders for the month ending on the 31st of July 2017. We are required to use the information given to prepare the ledger accounts, balance only the trading stock at the end of the month. Basically, we're not required to balance off sales. Clearly relies on the accounting records for the calculation of closing balance of stock. In your opinion, briefly explain how the stock balance can be verified. I think that's quite easy. The only way you can verify stock is by doing physical stock count. You are given balances on the 1st of July, which is the beginning of the month. 2017. Trading stock on hand was 20,600. Sales amounted to 44,400. I will simply take that straight to my general ledger. I will start the opening balance of trading stock. Trading stock represents the units we have that we haven't sold yet. But for us to determine that, we'll start with what we had at the beginning of the month. Trading stock increases and decreases at cost price. Please note that this is an asset account. It will increase when we buy more of this asset. The balance for trading stock was 20,600. By just putting it there, you get 1 mark. And sales, the opening balance at the beginning of the month for sales was given to you as well as 44,400. Sales is income. Income increases on the credit side. However, please note that sales increases at selling price. Now let's just read further. We are given cash receipts journal. Please note that cash receipts journal, it represents cash received. When it comes to trading stock, the only column that will affect trading stock from cash receipts journal will be the cost of sales. Cost of sales will reduce trading stock because it represents the cost price of stock sold. It will reduce the value of trading stock that we have. Payments, we have 17,900. That represents the cash we paid to purchase stock. Debtors control, cost of sales represents what we have sold. It'll reduce trading stock on the credit side at that value. Debtors allowances represents goods that were returned to us. It will increase trading stock on the debit side at that value, which is 220 Rand. Creditors control is when we buy goods or anything on credit. In this case, we bought trading stock for 5,990. Creditors allowances represent the returns we made to the creditors. That will reduce trading stock. But the problem is that here we don't have the value of trading stock. It's given to you as a question mark. We don't have packing material. The total of creditors control is the sum of all the other columns. So that 1,900 is equals to the question mark, which is the trading stock, plus 175 plus 1,155. Applying the reverse operation, we can say that trading stock will be 1,900 minus 175 minus 1,155, giving us a trading stock of 570. That 570 will be recorded on the credit side of our trading stock account as it represents trading stock that was returned to the creditor. Creditors, I think this is petty cash journal. Now, in the petty cash journal, we have 280. That 280 represents stock that we purchase from petty cash. So those 280 will increase our trading stock on the debit side. I think I've just summarized everything that we need to do here. I will start with my trading stock account as I have specified. It will increase whenever we buy or whenever goods are returned to us by debtors. This account is an asset account. It always increases at cost price. It'll never increase at any other value except the cost price. All right. Here I started on the debit side with cash purchases of stock, which we'll find from the CPJ. It was 17,900. We also purchased stock on credit. This will be found in the CJ. And the stock we purchased was 5,990. From petty cash, I just did it now. It was 280. And the returns by debtors from debtors allowances journal amounted to 220. On the credit side, it's everything that reduces your stock. The first thing that will reduce your stock is when you sell your stock. And here we sold our stock on credit. The cost price was 4,400. We sold stock for cash. That will be found in the CRJ. And the cost price of stock sold, which is cost of sales, will be 7,000. It will be decreased again. I just found the total there. It will be decreased by creditors' control. This is when we return stock to the creditors, and that will amount to the cost price of stock return, which is calculated, which is 2 marks. It will be 570. Then you calculate your balance carry down. So you take 44,990 minus 4,400 minus 7,000 minus 570. It'll give you the remaining stock, which we still have on hand, and that will be 33,020, which will become our balance of trading stock at the beginning of the new month. Sales increases on the credit side, and this is quite easy because sales will increase when we sell. And that information, we'll find it in the CRJ and DJ. So the total sales from the CRJ will be, we're going to write it as bank, and it will be 14,400. Total sales from the DJ, which is your debtors journal, will be 8,800. It increases sales on the credit side. Monthly sales will always increase. At the end of the year, please know that people think sales will decrease by debtors allowances. No, there is a separate account for debtors allowances, of which we will close off. We will close it off against sales, but only at the end of the financial year. Okay. I think I answered this question earlier on. Please continue to question 5, and there is one question that I'll come back to, and we'll answer this thoroughly. If you have the paper, try it out and check the memo. Thank you. Thank you for watching. Please don't forget to subscribe. Don't forget to like the videos as well. I really appreciate it. Thank you.